My name is Ben Fowler. And I'm happy to provide the introduction for this webinar today. So today's webinar is hosted by the Social Impact Measurement Topical Interest Group of the American Evaluation Association with Slavi Stevanovic and Lisa Glasgow. My name is Ben Fowler, and together we are the webinar co-chairs. So for those of you who aren't familiar, the AEA is a professional association of evaluators devoted to the application and exploration of evaluation as a profession. The AEA has approximately 6,000 members representing all 50 states of the US and about 80 foreign countries as well. The Social Impact Measurement Thematic Interest Group is called the SIM TIG for short. We're a group of AEA members who are interested in the topic of social impact measurement and management and exploring the interplay between the social and financial returns of investment. We come from a lot of different backgrounds, from evaluators, valuation commissioners, investors to investees. Being a member of our TIG means you want to learn more about evaluating the social impact of organizations that are aiming to produce both a social and a financial return, whether you are at the forefront of this work or just beginning to learn about it. And we're always welcoming new members. So we're going to post in a link so that you have a better idea of more about what we do. And if you're interested, we very much encourage you to join us so that you can receive more information about what we do. Also, all of our webinars are going to be recorded like this one. And so you can either find them on the AEA SIM TIG website or on our YouTube channel. And we'll share the link to that YouTube channel if you'd like to rewatch this later. Finally, each webinar in our 2023 series, and 2023 follows on a very successful 2022 series of webinars. This year, they're all going to be focused around the AEA 2023 conference theme, and that revolves around storytelling. So with that brief intro, I'm going to now turn it over to Lisa to introduce the presenters.
Great, thank you, everybody. We are recording, so if you are not speaking, if you would make sure to mute yourself, that'll make sure that our audio is nice and clear for the YouTube channel that Ben was just mentioning. And hi, everyone. I'm Lisa Glasgow. I know a number of you, and delighted to see your faces. I work on IRIS Plus and Impact Management at the GIN, and I'm a part of the SIM TIG webinar leadership team along with Slavi and Ben. For this year. And I second Ben in welcoming you for this webinar series. We're really excited about today, about what Ichiro will be sharing with us. And he's going to be talking, as you know, about evaluation frameworks for private sector projects. Before we get to that, the next webinar, as I think we'll announce relatively soon, will be in early April. We're still working on finalizing the details, but please do be on the lookout for it. It's going to be, I think, a pretty nice continuation and flow from today's conversation. So we'll be excited about sharing more there. And per usual, if you have ideas on future webinar topics, things you'd love for this group to dive into, please email us, and I'll put my email in the chat in just a second. So now, without further ado, I'll introduce today's speaker, and we are really, really lucky to have with us Ichiro Toda. Ichiro is a member of AEA and the SIM TIG, has been for a little bit, I believe. Ichiro joined the independent evaluation group of IEG in 2016, and he's been conducting project evaluations of IFC and MICA of the World Bank Group, primarily for infrastructure and fund projects, although Ichiro, I think your work has spanned a bit broader than that as well. Maybe I'll mention that. Before joining IEG, he worked at the development effectiveness area of IDB, the Inter-American Development Bank, and held several positions at Japan Bank for International Corporation. Ichiro, really excited to invite you to tell us a little bit more about evaluation frameworks for private sector projects, and I'll hand it over to you now.
Well, good morning, or good afternoon, or good evening, depending where you are. I'm Ichiro Toda, Senior Evaluation Officer of the Independent Evaluation Group, or the World Bank Group. Thank you so much for the excellent introduction. I'd like to thank all of you for your participation in the webinar today. And I'd like to thank for the SIM TIG leadership team, who are Lisa, Slavi, Ben, and also Heather Laura, who have organized this webinar. If I understand correctly, in the impact investing space, tremendous development has been made for impact measurement, whereas uptake of impact management, including the evaluation, has been relatively slow. Therefore, the purpose of today's webinar is for you, by learning IFC's evaluation framework as an example of evaluation approaches for impact investing, and by better understanding the value of evaluation in telling meaningful impact story, you will become more encouraged to build on result measurement and work for evaluation. I hope my presentation will promote discussion among us at today's webinar and going forward on the way to enhance evaluation practice in impact investing and social entrepreneurship. My presentation will take about 30 minutes to be followed by Q&A and discussion sessions, where I'd like to hear from you regarding evaluation practices of your organization, as well as your views on the state of evaluation practice in the impact investing or social entrepreneurship space. If you have any questions, please include your question in the chat box or directly share at the Q&A session. Lastly, the views expressed in the presentation today are my personal views and do not necessarily reflect the views of the independent evaluation group or the World Bank Group. So my presentation today has 3 parts. First, I'd like to share IFC's evaluation frameworks. Second, I'd like to share some idea about how project evaluations serve to tell stories, meaning not just what results were, but what worked well, what didn't, and what we can learn from to improve future operations. In the last part, I'd like to share some points for consideration to enhance evaluation practice as impact management for impact investors. First, let's look at the IFC's project evaluation frameworks. For you who are not familiar with IFC, International Finance Corporation, is one of the private sector arms of the World Bank Group. They provide financing and advisory services to private companies to support their project in development countries to alleviate poverty and promote shared prosperity. Now, please let me share how we consider evaluation. First, evaluation have 2 main objectives I know you are quite familiar with, but one is to ensure accountability by transparently providing information to key stakeholders. And the other purpose is to enhance learning by bringing lessons of experience to build on success and avoid failures. In terms of how we conduct evaluations, we review project logic leading to expected results, such as theory of change. Then we assess whether expected results are achieved. We also assess a project's or company's performance against certain benchmarks. IFC's evaluation frameworks developed based on the Multilateral Development Bank's Common Evaluation Framework for their private sector project, which are called Good Practice Standards, we call them GPS, developed by the group of MDBs evaluation offices called the Evaluation Cooperation Group, ECG. The framework was first developed in 2001, and the latest version was developed in 2011. The GPS defined the key principles and standards to be followed. They are grouped into 5 areas, such as independence of evaluation department, reporting and corporate learning, evaluation guidance and rating system, planning and executing a project evaluation programs, and evaluation matrix and benchmarks. The last 2 areas are specific to the private sector operation. I do not go into detail, but this is a helpful reference that can guide the establishment of evaluation framework for impact investors or social entrepreneurs. Now let's look at the IFC's evaluation framework for investment project. Please remember IFC has 2 types of project, operation, investment, and advisory, and we focus on the investment. In terms of the timing, a project evaluation takes place typically between 5 and 7 years after the approval. The framework comprises 2 activities: self-evaluation by IFC management and validation by independent evaluation group. The key aspects of self-evaluation are that IFC investment staff undertake detailed evaluation, and that self-evaluation is carried out only once in the project life, when it reaches so-called early operating maturity. Actual projects for evaluation are chosen from those mature projects based on stratified random sampling. The key aspect of validation are that IEAG validates all the self-evaluation provided by the IFC, and it undertakes additional research to validate them. Validation is done mainly as a desk review basis, and in some exceptions, field validation is conducted, particularly for ENS aspects, at least before COVID era. The evaluation results, particularly development outcome results, are aggregated and reported on a 3-year rolling average to ensure that the results representativeness at the portfolio level. In terms of the evaluation process, this slide contains a lot of information, but basically what you are looking at are the process for self-evaluation, marked with blue, and the process for validation, marked with green. In a nutshell, the key facts are that many staff are involved and multiple steps are required to undertake evaluations. And let me stop here and go to the next slide. Now let's look at what is going to be evaluated. Following the ECG framework that I mentioned, we looked at 4 performance areas. The first is IFC's additionality, which is the value added provided by IFC to projects and clients. We will see a bit more in detail in additional slide later. Second, in development outcome, we assess achievement of project development objectives and their contribution to the development of the countries and people. We will see a bit more in detail in the following slides as well. Third, in IFC's investment outcome, we assess the financial return for IFC's investment. Fourth, in IFC's work quality, we assess the quality of IFC's front-end work, as well as supervision and administration work. Finally, based on the analysis of these 4 areas, we also identify relevant lessons to answer questions such as what worked well, did not work, and what are the implications for future projects. Now let's focus on development outcome, which is one of the 4 performance areas that I explained in the previous slide. There's a lot to take in here, but I'm going to walk you through and highlight the important information from left to right. For the assessment of overall development outcome, we looked at 4 dimensions, the gray circles, and for each dimension, we focus on outcomes.
Excuse me, sorry to interrupt. If you are not speaking, yeah, thank you. Could we all mute? Thanks so much. Yeah. Continue here.
Right. So for each dimension, we focus on outcome for specific stakeholders. The first dimension is project business performance, in which we assess the impact on the client company and financiers. For economic sustainability, we looked at outcome for customers, employees, governments, and suppliers. For environmental social effects, we assess impact on communities and environment. Last, for private sector development, we looked at larger impact at the market level, and relevant stakeholders include competitors, new entrants, and producers of complementary goods in the market. For each dimension, we looked at a combination of achievement of objectives and performance measured against relevant benchmark and standard, such as social benchmark for economic rate of return and World Bank Group performance standards for environmental social effect, and achievement of objectives relevant to specific dimension. Another area we examine a little bit more in detail is additionality, as I said, which is unique support that the organization brings to a private sector investment project that commercial financing does not typically offer. The multilateral development banks came up with their common framework for additionality in 2018, although the concept of additionality had been evolving even before that. And according to it, there are two types of additionality. The first, financial additionality, would include financial structure and instrument, resource mobilization, and provision of MDBs on account equity. Non-financial additionality would include risk mitigation policy, sector, institutional, or regulatory changes, knowledge innovation, and capacity building and standard setting. So far, we have looked at key features of IFC's evaluation framework for investment project, which would be more probably relevant for impact investing. But here, please let me share the evaluation framework for IFC's advisory projects very briefly, because it may be relevant for grant projects such as capacity building to support impact investors or social entrepreneurs. The framework for advisory project here is based on the so-called objective-based approach, in which the focus is more on the achievement of development objective. In this sense, it follows the evaluation approach for more public sector projects, such as the World Bank's project. Development effectiveness, you see in the left-hand side, is one of the key areas and includes 5 dimensions. And answer specific question. Strategy relevance assess the project purpose. Output assess what was delivered. Outcome assess what the client changed as a result of the project. And impact assess the effect those changes had on clients and other stakeholders. And lastly, efficiency assess whether the results were achieved in an efficient manner. I'm sure that many of you are somehow quite familiar with these types of evaluation approach.
For you to start.
In addition to that, there are other areas that we looked at. The one of them is IFC's role and contribution. The concept is somehow...
It won't be stressful. It won't be stressful because of the hybrid nature.
Excuse me, Olisa, we can't hear you speak.
Once it gets to that stage, I think your manager will...
Thank you.
Ichiro, could you please unmute yourself? I think I just muted everybody. Sorry about that.
No, it's okay. Okay. So in addition to the role and contribution, we also look at IFC work quality, which include the design work and implementation work, which is somehow similar to the concept of the evaluation approach for the investment project. Now, let's move to the section where we see how evaluation can help tell impact story. As I said earlier, beyond just results, what those results tell us and what we can learn from them. That's how evaluation tells stories. One key aspect of telling stories is the result driver. By assessing holistically and deeply the project results, evaluation can identify key drivers of performance. Based on experience in evaluating projects, these factors can be grouped into 6 types. From the left to the right, the first one is sponsor and client capability factors, which include sponsor technical expertise, financial capacity, commitment, integrity, and corporate governance. The second one, the market factors, include the company's business model viability, its competitiveness, and the demand for the company's goods and services. The third one is regulatory and political factors, which include the regulatory framework's credibility, the government's policy commitments, and the country's political stability and public support. The fourth one, the project-specific factors, include project construction and implementation issues, as well as technical, environmental, and social aspects. The last one, the economic factors, include macroeconomic aspects such as local currency depreciations, commodity price fluctuations, natural disasters, and other crises and external factors. These are the factors actually externally to the IFC or the organization. However, if shortcomings arise in identifying key project risks in these areas and incorporating proper mitigation measures, or if the organization failed to monitor the emerging issue properly during the implementation, these or quality issues become internal result factor of the project. As I mentioned, the result driver are strong ingredient for lessons, which answer questions such as what worked well, what didn't, and why, as well as what advice would be provided to teams undertaking similar operations. These are the stories from evaluation that are important for the learning mandate. In writing good lessons, one must meet certain criteria, such as actionable, meaning oriented to decision points, relevant, meaning lessons are useful for other project or program, non-generic, meaning lessons are detailed, distinct, and informative, and specific, meaning project, program, or content-specific lessons, and finally, the valid, the lessons should be flowing logically from available evidence. However, we still see some challenges, such as ensuring relevant lessons are aggregated, lessons are disseminated throughout the organization, and the formal follow-up process is available to ensure the lessons are implemented. The evaluation results, particularly ratings, can be aggregated to inform the portfolio's overall performance trends at various levels, such as corporate or sector. This is another way to tell stories from evaluation. Result driver analysis at the project level can show also factors contributing to such trend, which can be used to improve the organization of future performance. And this is a part of impact management. For example, this figure that you are showing is taken from the independent evaluation group's annual result and performance report, the latest one of the World Bank Group. And the gray line graph shows the overall success rate of IFC's investment project over the year. When we look at this graph, one of the stories we can see is that the declining trend has reversed, and there are factors contributing to it. Again, this is another way to tell stories at the portfolio level, or it could be sector level, but in aggregated level. Now, for the rest of my presentation, I would like to share some consideration related to evaluation practices for impact investing or social entrepreneurship space. First, several impact principles and standards indicate that evaluation is a key tool for impact management and therefore constitute an integral part of the impact measurement and management framework, although they do not necessarily always refer to evaluation in their standard. One good example is operating principles for impact management. Their principle 8 states that the manager shall review and document the impact performance of each investment, compare the expected and actual impact and other positive and negative impacts, and use these findings to improve operational and strategic investment decisions, as well as management process. I believe this definition or these standards sound familiar to you, which exactly represent the nature of the evaluation. Other standards and principles, such as those of GIN and SDG impact, also include standards related to impact management. However, the adoption rate of evaluation practice by impact investors still seems low, and there is room for enhancement compared to the impact measurement. As an indicative example, we looked at Bluemark's latest benchmark report on impact investors' alignment with operating principles of impact investing. You see here a number of principles, but I want you to focus on principle 8 at the bottom, which is related to the evaluation practice that I just shared in the previous slide. We found low alignment, as you see there, with principle 8. There are some other principles, such as principle 7, which has low alignment, but again, my focus here is principle 8. The quotes from the report indicate less uptake on monitoring and review of unexpected impact, as well as learning from the impact performance review. You can see those quotes in the right-hand side box, the second and the third one. And then at the top, the report called for increased attention to impact management at the end of the investment lifecycle. Since we compare the adoption of impact measurement and impact management, let's review how result measurement and the evaluation are different. Under result measurement, relevant indicators are identified at approval to measure key development outcome. Recently, impact investors have also been developing rating or scoring systems which indicate the magnitude of expected and actual development outcome. Meanwhile, evaluation can fill some gaps left by the result measurement in a number of ways. For example, whereas result measurement can indicate actual results of projects or lower than the target, evaluation can explain why those outcome targets were not achieved by identifying result drivers, as we mentioned. While result measurement only covers intended outcome, evaluation covers unintended outcomes as well, positive or negative. Evaluation also covers broader aspects such as additionality and work quality. And finally, evaluation produces relevant lessons, as we have seen. In this regard, we can say that result measurement and evaluation play complementary roles. This slide tries to visualize one of the complementary relationships of result measurement and evaluation. Let's assume a project produces two outcomes. Let's see outcome 1, the blue bars. If you look in the middle, you can see the result at evaluation. And then if you compare it with the baseline at the left, the result was substantial. And if you compare the result to the target, which is on the right, you can see the outcome target was achieved. If you do the same for outcome 2, the green one, we can say the result was good level compared to the baseline, but the target was not achieved. Now the result measurement and scoring can get at substantial, good, and perhaps indicating whether results were achieved or not, but it cannot show why the target, for instance, for outcome 2 was not achieved. And this is where the evaluation comes in, to identify the result driver and provide a meaningful lesson. As an effective approach to identify the result driver, we can look at, for instance, the performance of similar companies, which are called peers, or the relevant industry's overall performance. For instance, even though the company fell short of the target, like outcome 2, if the peer's performance actually decreased, then we can say the project may still have made a positive contribution to the client performance. Finally, we'd like to discuss several challenges and opportunities in increasing uptake of evaluation practice by impact investors or social entrepreneurs. We will look at 3 elements for impact investors, which are methodology, process, and organizations. First, regarding the methodology, it is still business performance that enables the expected social impact, and assessment of business performance will be an important part of evaluations. At the same time, we should think about which elements go beyond the business performance and affect achievement of social impact. It is hard to measure higher level outcome and assess project contribution to them, given the relatively small size of investment supported by impact investors and the longer time horizon for a higher level outcome to materialize. Second, regarding the process to ensure that the evaluation practice is implemented, it is critical that evaluation is included as a part of project cycle rather than considered ad hoc activity. Establishing a feedback loop is also important to ensure that lessons drawn from evaluation are reflected in new projects and enhanced learning. Developing an internal lesson database and process would greatly contribute to this goal. Lastly, regarding organizational aspect, the organization's overall culture of promoting accountability and learning is critical. Undertaking proper evaluation requires resources, including human resource, and the availability of expertise to understand, for instance, business and development is critical. Taking advantage of existing system and matrix from this regard would alleviate resource constraints and enhance efficiency. Well, this concludes my presentation today. Now I welcome questions you may have on my presentations. I would also appreciate greatly if you are willing to share briefly, for instance, your organization's evaluation practices or your views on the state of evaluation practice and how to enhance evaluation practice in impact investing or social entrepreneurs. Thank you so much. So let me see if we had any question from the chat box. Or Slavi, Lisa, Van, are you willing to share if there's any questions? Okay, let me.
I think there was just one question, and it actually came from me. This is Slavi here. I'm a managing partner of Catalyst Research in Vancouver, BC. So you were talking a little bit about the low level of impact review still among the impact investor, and I was wondering if you had any insights as to why that is. Is it a matter of awareness or education about evaluation, or is it resources?
Thank you so much. Well, this is a great question, and let me first try to address this. So based on my conversation, in my experience with several impact investors or social entrepreneurs, obviously the first constraint would be, as I mentioned, the resource. There is a perception that evaluation is really resource intensive and it requires more work from the various areas within the organization. And I think the priority so far has been to focus on measuring the results and to compare the results with the target. The result measurement, I think, has been more priority, gained more priority from those impact investors. But so I would say the resource constraint is number one. And then there are some other, I think, consideration need to be made. And as I said in my slide, there are various aspects, the methodologies, the process, and emphasis from the top management on the importance of evaluation. So the last slide somehow tried to identify these are probably the challenges, and then you can consider them, group them in methodology, process, organization. But I would say the first-hand impression is more on the resource and efficiency. But again, I'm very much interested in hearing the views of other participants in your organization. If you are trying to undertake evaluations, but if you are facing some constraint or challenge, it would be great to hear from you. I don't know if one of you are really willing to share your experience.
So an invite to share feedback, as well as Ichiro, we've gotten a number of additional questions coming in.
Why? Yeah.
So it sounds like people still want to learn from you versus sharing with you their insights. Though if anybody would like to jump in on talking about challenges and learnings in their own evaluation practices, just signal in the chat and I'll call you in and raise your hand. First question we're seeing in the chat is, at the IFC, how do you get investment officers interested in post-transaction evaluation once they achieve financial return and after they've satisfied all the ex-ante requirements for screening? What's in it for them? So really a question about how do you incentivize, how do you build enthusiasm from investment officers for post-transaction evaluation?
Okay. Yeah, this is a great question as well. So in IFC, the result measurement and also evaluation has been getting a lot of importance. Well, IFC has been implementing the evaluation practice for a long time. And as the question said, you would think that the investment officer would be more interested in getting the transaction approved, and then also making sure that the project ensures the financial returns. However, as I mentioned in my slides, the IFC has been emphasizing the importance of monitoring and evaluation as well. And there has been a lot of effort to ensure and enhance the good evaluation practice undertaken. And this is the importance of the lessons and the feedback loops comes in as well. The lessons have been very useful for enhancing the quality of future projects. We try to make sure, we try to make sure that lessons are practical, meaningful, and there has been a lot of effort to draw lessons at portfolio, and it could be sector or industry level. And these lessons drawn from the evaluations are effectively communicated to the project, who are the project team who are working for the ex-ante or the front-end work. So I would say the key to enhance or key to ensure that the evaluation activity, monitoring and evaluation activities are meaningful for those who are working for structuring or investment officers. Again, drawing good lessons, ensuring the feedback, and ensuring the process and the priority placed from the top management has been very important. Let me stop here.
That's really what I'm hearing is it's really helping people understand aligned incentives for themselves as well, so that it's kind of intuitively and deeply incentivized to them. For those of you who are following along, I'm going to skip one because I think it builds quite nicely on what Ichiro was just saying, and then we'll go back to the other questions. So next question for you, Ichiro. Can you share more about best practices you've found on the establishment of a feedback loop at the institutional level? So how do you ensure adoption of lessons learned once you've learned them through an evaluation?
Thank you so much. So the challenge, so there are a number of efforts which have been done and ongoing as well. The first one is trying to ensure improve the quality of lessons per project. And then the internal database has been developed so that teams working for new project can refer to those lessons. And also there is a process incorporated at the discussion of in earlier stage of the new transaction. Then there will be a question, what are the lessons from the similar project, and a certain department, I think there is a process to ensure that these lessons are inquired. But the best practice also would be at portfolio or aggregated level. In the past, in recent years, we've been producing some analysis on the performance of project based on the evaluated project for certain sectors and industry. For every 3 or 4 years, then the sector level analysis are produced. It is more like learning engagement jointly between investment team, IFCs, and independent evaluation groups. And then we draw the lessons collectively from the similar project. They are somehow sector specific one, but very, very tangible and useful. And then we share those lessons. Those lessons are communicated, shares. And for instance, there are some cases where internal emphasis has been placed on the better understanding on the risks and issues involved for certain types of project. And also, I saw in the portfolio level, I indicated the portfolio level pictures in one of the slides, and IFC has been making a lot of emphasis to ensure that to emphasizing the development impact and how to measure, how to prioritize, focus on development impact aspect. So there has been a number of action being taken, and that could be another good example of best practice, how showing the portfolio level performance can actually drive the specific action from the organization and management.
That makes a lot of sense. So really for you all, it's kind of a combination of a couple of things. But what I liked about the way that you just shared the approach is that it sounds like you all have a couple of different established checkpoints after a couple of years or a year or something like that, where it is just kind of written into your plans that you're going to look at a specific sector or a specific type of investment, something like that, and take a moment to stitch together all the lessons learned and then put that in a report or put that in I forget the term you use, but like a flexible learning engagement for investment officers. So really, it's pretty intentional, and you all put checkpoints in place to make sure that you are making space and making time to create those feedback loops. Is that right?
And that's where, as the theme of the evaluation, as American Evaluation Association asks, like the importance of telling story to communicate what are the lessons from project portfolio level so that they are reflected in the future project operation.
That's perfect tie-in. We've got a couple more questions, and I'm also keeping an eye on time. So let me throw out another one. This is from Denise. She says, I recently reviewed all major gender lens investing tools and concluded that gender lens investing is a program or intervention in itself, rather than just a set of measurements. Has IFC examined different social impact intervention programs to assess impact?
Social impact intervention program. So what I can tell is, from evaluation perspective, the independent evaluation group has been conducting thematic evaluation. there was an evaluation. I think there's an ongoing evaluation on gender. There was a review of the gender strategy, I believe, and there are different evaluation points of the climate change portfolio, the activity towards fragile conflict state. And then for those evaluation, the findings are based on the dialogue and analysis of the IFCs, MEAGR, and the World Bank. So at least I would say from the independent evaluation group's perspective, there has been specific analysis. You can see in our website, the thematic evaluation on specific theme. I believe that IFC is undertaking their own analysis with specific focus, but at least what I can tell is from IEG's product, we've been evaluating thematic areas that has been supported by IFC.
Excellent. And I think this may be our last question for you. There is a question in the chat also from Denise about whether the IFC model is aligned more with the OECD approach or the DSET approach to results-based management. And Denise, if there's anything you'd like to add there, you're welcome to jump in as well.
Okay, great. So if I understand correctly, OECD's approach look at effectiveness, efficiency, relevance, and I think efficacy and price rate. I think there's a new standard coherence as well. And I think DCED somehow, they have, if I understand correctly, they have some approaches for measuring their the project related to social impact areas. Right? And I'm not so, for me, I looked at DCED framework a few years ago, but not so familiar with the latest one. But what I can tell is, as you may remember, I explained two frameworks. One is a framework for investment, and one is for the advisory. I would say on face, like on surface or at first glance, the advisory evaluation framework for advisory project look much more similar or kind of aligned with OECD's approach, again, based on the efficiency, efficacy, and relevance, which somehow the public sector operation follows. However, for the investment project, as indicated by the slide, they focus more stakeholder approach. So rather than looking at more vertical kind of way from input, output, outcome, the stakeholder approach looked at impact or outcome on variety of stakeholders, financiers, customers, competitors, and government employees. From that perspective, I would say the public sector, the advisory, the evaluation framework for advisory project is more aligned again on surface with OECD. However, it doesn't mean that for investment project, we do not look at relevance or effectiveness or efficiency. Still in each dimension, we try to look at the different level of outcome. Could be, as I said, higher level or more immediate, intermediate. We also look at efficiency as a part of economic sustainability analysis. The relevance is also important. Although the relevance itself is not the rating criteria under the investment approach. So I would say the different approach, but the key principle of the evaluation of OECDs are still reflected also in the investment evaluation framework for investment project.
Thank you. Thank you so much, Ichiro. This has been such a wonderful learning opportunity for me personally, and I imagine for a lot of other folks on the line. We are going to go ahead and wrap here. So let me introduce Slavi. Slavi, can I have you come in to wrap us up?
Hi, good morning, everyone. Thank you, everyone. And first of all, thank you, Ichiro, for such a wonderful and informative presentation. As I mentioned before, my name is Slavi Stevanovic. I'm from Catalyst Research Group, one of the coordinators. Apologies for some technical difficulties, but we want to thank you all for participating. This recording is going to be on our YouTube channel, so check your chat box there for that. And as noted earlier, we are always accepting new members, so check our website for that. We're welcoming you to SIM TIG, and keep an eye open for our next presentation sometime in April. Thank you all very much for joining us.